We let everybody in.
Yeah, they're coming in.
Looks like we've got a few coming in now. Okay. And Lenny, I do see the chat. That works perfectly.
I think you see it. But it says to host and panelists. I don't think I can expand that.
Okay. To those of you that just joined us, thank you very much for being here. We're going to wait about 1 more minute or so and let people filter in, and then we'll get started. Why don't we get going? People will probably wind up coming in as we get started. But welcome everybody. Thank you very much for your time. We appreciate you coming and joining us tonight. We know your time's valuable. My name is Jason Heiser. I'm with a group called Financial Strategies Group, and I am here to tell you about the Physicians Life Income Plan. We will do our best to keep this presentation to about 10 to 15 minutes or so. We know your time is valuable. That being said, myself and my partner Lenny here will stick around for as long afterwards to answer questions for you, kind of go through anything you'd like to discuss one-on-one here. We will stick around as long as you'd like. But with that being said, we'll kind of get started. So what I want to do is kind of tell you a little bit about who we are, what we're doing, and then we'll get into the Physicians Life Income Plan. My group, Financial Strategies Group, is a specialty team. We are made up of financial advisors, CPAs, and attorneys. We work with physicians like yourself all over the country. The Physicians Life Income Plan is one of our largest platforms that we are at this point rolling out all over the nation. All right, the Physicians Life Income Plan is a supplemental retirement benefit program that each and every one of you should absolutely be taking advantage of, and I'm guessing not any of you have ever heard of. So our job here, we brought this idea, this concept to MSSNY. We met with the board. They helped vet it out over the last year or so. We met with their CPAs. We met with their attorneys. We had their financial people kind of analyze this, and they agreed 100% like we did that this makes a ton of sense for each and every one of you, and asked us to bring this to MSSNY, offer this out to the members, roll this out as a benefit program, and that's exactly what we're here to do. All right. Like I mentioned, the Physicians Life Income Plan is a supplemental retirement benefit program. This is a non-qualified benefit. This is going to act, look, and feel like a Roth IRA. All right. So there are no tax deductions up front. This is after-tax dollars that we're looking at, but we'll get a little bit into that as we dive into the presentation here. So I'm going to go through a couple of things here for you. All right. All right. So I mentioned that we are a specialty group. Our main focus, our niche, is tax mitigation. My group creates tax solutions for wealthier individuals in all aspects of estate planning, tax planning, business transition, wealth transfer, etc. The Physicians Life Income Plan is designed to exactly do that, mitigate taxes now during your accumulation years and in your retirement. Okay. So in regard to investing, one of the questions that we always ask our clients is, what is the biggest fee that's involved when you're investing money? Now, each and every one of you has managed money, different types of accounts. Well, there's always the investor fee, the investment fee that you're paying to your broker. There's always going to be your managed money fees. There's going to be your fund fees, depending on allocations, etc. But none of those compare to the largest fee when you're investing. Largest fee when you're investing is actually taxes, right? So these three items here, I've got your equities, your S&P, I've got your corporate bonds, and your money market. All right, and I would imagine that each and every one of you has some fashion, or maybe all three, of investment money in these three vehicles. So here's how I want to show you how the fees are the largest in the tax range. All right, so the 2024 return on the S&P 500 last year was 23%. Corporate bonds right now are averaging about 6%. And the money market accounts you can get into between 4.5 and 5, somewhere in that range, are all great returns. And so, if you were telling your friends, hey, I was in the S&P last year, I made 23%. But I'm here to tell you that that's not exactly accurate. all right? Because while you made 23%, you have to take into consideration the taxes. So for those of you who are in the higher income earners, and that pretty much is the majority of you at MSSNY, all right, you're probably netting somewhere around 15% on that 23. You're not getting the full 23 because a big chunk comes out in taxes. Those corporate bonds that were earning 6, you're looking more to 3.1% return after taxes. And the money market that you're getting 4.5%, 5% on, you're looking at 2.3%. Taxes takes a huge chunk out of what you're doing. And so what we're here to do is kind of show you some different ways that maybe we can change that for you. The Physicians Life Income Plan is just an asset allocation adjustment for you. We're just going to move some money around, and using it, we can take that S&P 500, those corporate bonds, that's that money market, however you, the investor, chooses to invest, and we can get you that full gain. So if I told you that you could just basically reallocate all of those funds into the Physicians Life Income Plan, or PLIP as we call it, and earn that full 23%, or that full 6% on your bonds, or the full 4.5%. You'd ask me how we're going to do that. Well, we'll tell you a little bit more about that, but that's exactly what this strategy is built to do. So let's talk about the PLIP, right? The PLIP is an investment vehicle. It's not a qualified plan. This is not an actual retirement plan. It's not a 401k. It's not an IRA, but it looks, acts, and feels just like a Roth. The funding for the PLIP, we're going to look at your equity money. This is all after-tax dollars. So we're not looking at pensions. We're not looking at 401ks, 403bs, et cetera. The money that we're looking at here is going to be any money you have in the equities markets, any bonds that you have, any money markets, CDs, stuff like that. If you have cash value life insurance, that's going to fall into this category as well. And what we're looking to do is reallocate those assets into a new investment vehicle that will now save you in taxes. But there's a whole bunch of more benefits to it, okay? Every dollar that you reallocate into the Physicians Life Income Plan now becomes fully creditor protected. In the state of New York, 100% creditor protected, and most states in the country, it's the same. So wrongful death, malpractice, any kind of a liability, any kind of a lawsuit against you, your money, just like your qualified money, is now fully protected from those lawsuits. All right, so that's a fantastic perk to the Physicians Life the Physicians Life Income Plan. Right, every dollar that you reallocate into the Physicians Life Income Plan grows tax-free forever, comes out tax-free forever, and if you die, it passes on to your heirs tax-free forever. Just like a Roth IRA, all of the benefits, okay? All of the benefits of the tax benefits, but also in the investment side. So the Physicians Life Income Plan it's an investment platform. It'll look just like your 401k plans or your pension plans. Over 96 different funds, big funds, BlackRock, American Funds, PIMCO, Franklin Templeton. You know, everything that you're already investing in, we have those options inside of the Physicians Life Income Plan. There's no restrictions on this. So as you're managing your money throughout the year, as you're trading, as you're buying and selling, et cetera, inside of your brokerage accounts, you're going to get capital gains bills each year. Inside of the Physicians Life Income Plan, all of those capital gains are eliminated because of the vehicle, because of the chassis that the money is allocated inside. And we'll talk a little bit more about that and how that works. But you can manage your money as freely as you'd like without any capital gains. Okay. There are no holding periods, no surrender charges, nothing like that. Every dollar that you move into the Physicians Life Income Plan is 100% liquid at all times. So if for some reason next month you decided that, hey, you know what, this isn't what I wanted, or I don't think I want to be here anymore, or I need my money back. Well, every dollar that you move into this plan is fully liquid. So like a Roth, you'd have a 5-year rule, the 59.5-year rule, things like that, where your money is tied up. That does not exist here. All money is liquid, all right? Surrender charges. A lot of you are familiar with in different types of investment strategies, investment vehicles, annuities, life insurance, investments. A lot of them come with surrender charges, meaning you can't get all of your money back out if you want to get out right away. Again, that does not exist here. All of the money in the PLIP is 100% liquid at all times, okay? With this investment vehicle, you have full access to your money. And this is a big difference in some of the retail products out there that we can get into a little bit further again. But the Physicians Life Income Plan has a third-party administrator, a platform at no additional charge to you, the investor, that comes along with the program. This gives you a 24-hour access to your money. You can look at your money on your phone, on your computer, your tablet, etc. You're going to have a portal. You're going to be able to see what that looks like. I'm going to show you a snapshot of one here in a second, but you're going to always be able to look, see, and feel that money. It hasn't gone anywhere. We're not relying on paper statements or 1-800 numbers. You're going to be able to always have access to your money. But inside of this portal, you're allowed to make your own trades. You can find your annual reviews. You'll always have live support. So many investment vehicles, you have an 800 number that you have to go through 6 or 7 different prompts to get a hold of somebody who might or might not have the answer, might have to transfer you over. That's not the case when it comes to the PLIP. All right, you have 24-hour support. A live person will actually answer the phone, pull up your account, and walk through any questions you have. You're also going to have a team implemented to kind of support you as well on top of that. But again, we'll get into that a little further. But again, tax-free growth, tax-free withdrawals, tax-free death benefit, creditor protection, 24-hour access to your money, and over 96 different investment choices. Those are just the bullet points of the PLIP. So what are we doing with the PLIP? I mentioned that our goal here is to lower taxes. And I said we can get rid of taxes in the accumulation phase and we can lower your taxes significantly in your retirement age. But let's show you an example of kind of how that works and what I mean. All right. What we're looking at here, if I asked you if you wanted to make a $500,000 income in retirement, that's what you wanted to live on, and I asked you what tax bracket would you be in? While you may not know the exact bracket, the majority of you are going to tell me the highest or a high one or a really big one. Okay, and it's a fair answer. I'm here to show you how the PLIP can actually really significantly lower that, and we're going to give you an example. Okay, so with your retirement buckets, the majority of you have the top two. Your qualified stuff, your ordinary income, your Social Security, your IRAs, your 403Bs, your 401Ks, your pensions, those are all going to be in your ordinary income bucket. Your long-term capital gains, this is going to be the after-tax dollars that you've had with managed money, hedge funds, etc. Okay, some of you will have some of that tax-free bucket in a limited fashion. Tax-free bucket vehicles, you're going to have your muni bonds. If you trust the municipalities these days, you can invest in those. You're going to have your Roth IRAs. Most of you make too much money to contribute to those, and the little amount of money that you have in there isn't going to make a significant impact on your retirement income. And then you have cash value life insurance. Now, retail life insurance does offer tax breaks, but at the same time, the internal fees, the management costs, everything inside of those contracts, it really eats away at those tax gains and kind of negates the whole point of it. Again, we can talk further into that a little further. But these are the 3 buckets. Our goal with the PLIP is to create that tax-free bucket, is to give you that 3rd bucket with unlimited fashion. And we'll talk more on that. All right, so how does it work? And how do we lower your tax bracket using those buckets and the 3rd bucket? Okay, well, our tax brackets in the US are actually pretty reasonable if you understand how to manage them, right? What we're trying to do with the PLIP is help you avoid that 22% and higher bracket. And so up to the first $151,000 of income, you're only really paying a 10% tax on that money. So if we pulled $151,000 out of your qualified money, now I'm going to give you a disclaimer here. We're not doing any types of complicated tax planning to get these numbers. Each of your CPAs will fully agree with this. We'd be more than happy to discuss that. Again, we'll talk more about that as well. But we're just using a standard deduction on this. Okay, so we're going to take $151,000. We're going to use a standard deduction only. We're not talking New York tax. We're probably shooting a little low here, but on that $151,000, you're going to pay roughly $15,000 in tax, or right around a 10% bracket. Okay, so then we're going to draw another $151,000 out of your long-term capital gains bucket. This is going to be your managed money, your hedge fund money, your investment money, etc. And again, as long as we stay below that certain bracket, we're going to be able to keep that $151,000 out of that bucket as well, and keep the income somewhere around 15%. So now we basically accomplished, we pulled out roughly $303,000. We've paid roughly $38,000 in taxes. But we want to see a $500,000 income. So we still need a big chunk of money coming out in our retirement. Well, if we pull $197,000 out of a tax-free bucket, we don't owe any taxes on that money. It's not reportable. There are no taxes. Well, all of a sudden, we have that $500,000 income we're only paying $37,861 in taxes, and now your effective tax bracket on $500,000 is 7.6%. This is something that every CPA will agree with. We'd be happy to walk through it. This is just a generic example. We will work with you one-on-one with this program, and we'll design this. It's going to be custom for everybody. I picked an even round number at 500,000. I picked a sample here. Each and every one of you are going to be different, but this is the goal. This is what we are trying to accomplish with the PLIP. Okay, so let's talk a little bit about the PLIP vehicle itself. So the vehicle behind the PLIP is an institutionally priced variable life insurance policy. Some of you may have heard, most likely not, but of COLI, corporate-owned life insurance. COLI has been around for over 65 years. A lot of people hear the word insurance and they back off, they get scared, it turns them off, okay? But in our world, in this institutionally priced world, this is your best friend, okay? Every Fortune 500 company has had access to this for over 60 years. Every Fortune 500 has hundreds of millions of dollars of this exact program on the books. Every major bank has tens of billions of dollars of this exact program on their books. And there's a reason for that. There's a reason that they're not buying a retail product. There's a reason they're using it. It has nothing to do with insurance. It's all about taxes, and it's all about an institutionally priced product. So institutionally priced means all of the fees and all of that extra cost that a retail investor takes on with normal products are stripped out. The reason they were able to do this was that because in the past, the minimums into this, the minimum contributions were in the millions of dollars, and it was only allowed for certain individuals. Equitable is one of the largest insurance companies in the world. Equitable, about 7-8 years ago, went to all 50 states and got this particular product finally approved for the individual person. No business ties, no corporate ties, just an individual person now can qualify for this product. For the same thing that all the Fortune 500s use, you now qualify. All right. So this institutional product has cash values, like I said, that grow and are accessible tax-free. It has no surrender charges. We talked about that. And it's completely liquid at all times. 84 sub-accounts probably should be adjusted to closer to 95 at this point. But you have all of these different investment allocation options inside. The website with daily values is what I was talking about. You're going to have an online portal. You're going to have access to your money at all times. You're going to get quarterly statements. You're going to have a comprehensive review, annual review every year. You're going to have access to your money at all times and full support with it. All right. So when I use the word insurance, it has nothing to do with insurance. It just happens to be the tax vehicle that allows us to get these tax-free gains. I'm going to provide some more information on that on a follow-up email. We can also talk more about that in question and answer. I try not to get too much into detail on tax law, but at the same time, the reason we use this vehicle is because of the tax laws. So FSG ourselves, we are a full disclosure company. We are not here to steal your business from any financial advisor. We're here to roll out this plan. We are strictly here to bring the Physicians Life Income Plan to your attention, to teach you about it, because you really should be taking advantage of it. We want to work with your team. We insist that you bring your CPA in to verify all the tax planning. If we get into estate planning, et cetera, we actually would love your attorney to join us on a call. We want to work and be part of your team to implement the PLIP as part of your overall investment strategy. It's not intended to take over all of your money. Here to work with your team as a team. Earlier this week, I've had my team pull up this snapshot for me. So as we've been rolling this out over the last few months with MSSNY, I've had a lot of questions from the different physicians that we've worked with about, how many people are doing this? I've never heard of this. Well, why can't I find information? And I get that. I will tell you right now that less than 1% of the financial advisors in our country even know this exists. So when you try to do your own research, when you ask your advisors about it, most of them are not going to know what it is. They're not going to be able to give you too much information. I'm going to do my best, again, in the follow-up to provide some information for you to do your own due diligence. We understand you will. We'd love to work with you one-on-one to answer as many questions as you have. But I had the team pull this snapshot. People wanted to know, who are we working with? How many people are doing this? Well, this is a filtered amount of money. We filtered the participants to physicians like yourself and business owners as well, because we understand that the majority of you are going to be physicians and or business owners yourselves. So we have 223 current physicians and business owners in this plan with over $125 million allocated. And that is strictly physicians and business owners. So just for a little reference point, I can't give away client information. I've been asked for some sample ideas or some sample case studies, etc. This is a big picture total of who's doing this. All right. We talked about the online portal. I talked about your access to your money at all times. So what I wanted to do was I pulled a snapshot. This is actually one of my partners. We pulled a snapshot of his account. I wanted to be able to show, kind of what you'll see on a daily basis. This is only one of the screens, but this is as of market close on the 24th of February. All right, we took the snapshot that day. When you log into your account, you're going to be able to see your pie chart. You're going to see all of your investment allocations. This is not live, so obviously it's not changing. It's not showing. But you're going to be able to view your account balances. You're going to be able to make changes. You're going to have that live access to your money at all times. This is just a snapshot, but this is what the portal will look like for you. Okay. So we talked about insurance. I mentioned the word insurance. While taxes are not there, insurance fees are the cost inside of an insurance policy. And so, I've heard objections of, well, I don't want to pay cost of insurance charges. But what if I said you choose? You can pay cost of insurance charges, which, by the way, inside of the PLIP are roughly 1%. 1%, that's it. You can pay cost of insurance charges, or you can pay taxes. You can pay cost of insurance charges, but you'll get a tax-free investment. You'll get creditor protection. You'll have no trading costs, meaning no fees, no capital gains. Trade as much as you want. And then you have 100% liquidity on your money, which means if you ever change your mind, you can get out and you can move it. So would you rather pay taxes, or would you rather pay cost of insurance charges? The answer is pretty simple. I mentioned we're going to do this quickly. I went through this fairly quickly for you. All of my contact information is here. We have an agreement with MSSNY that we will meet with each and every one of you. We'll do a full dive. We'll do a one-on-one session. There is no cost involved in this. Our team wants to meet with you. What we want to do is we want to get an overall view of your portfolio, everything that you've got going on. We really want to know, every detail of your financial life so that we can show you exactly how the PLIP can fit into your strategy. We're not here to replace it. We're here to be a part of it. It's a supplemental retirement benefit program that is available to all of you through MSSNY that you should definitely be considering. At this point, your next steps are going to be stick around for question and answer with us. Otherwise, my direct contact information is on the table here, but our website is going to be your next step. fsgllp.com/PLIP. We'll put that in the chat. I'm going to send out a follow-up email. The PLIP website has more information. We've got educational videos so you can kind of get an idea for how different aspects of this work, how it can work inside of your planning. There's going to be charitable ideas in there. There's going to be trust planning ideas in there. Just a ton of information. I really urge you check it out. But on that website is going to be a link to my direct calendar. I've opened up a significant portion of my calendar via Calendly. I'd love to meet with you. I'm going to be your next meeting. Let's meet one-on-one. Let's talk through everything you have going on. I'll answer any questions you have. There's no pressure here. We just want to get to know you. We want to build trust. We want to kind of figure out how the PLIP can work for you. So visit our website, schedule a meeting with me. All right. If for some reason you don't see an available time on my calendar, please go ahead and reach out to me directly. That is my direct phone. It's my direct email. Shoot me a message, shoot me a call. Let me know that, hey, the times available aren't going to work for me. I will work around your schedule. We'll make sure that either myself or a member of my team can make that work. All right. One of my partners is on here. I did not bring this up earlier. I kind of just jumped right into my presentation. But Lenny Marzigliano is a member of the Pinnacle Financial Group. The PLIP here is kind of it's a group effort between Equitable Life Insurance, FSG Financial Strategies Group, and the Pinnacle Financial Group, local Long Island. This is a registered securities product. So the Pinnacle Financial Group, we vetted them out. We picked them as the best fit for our New York representatives for this particular program. And Lenny is our program head over at Pinnacle. He's been on the webinar the entire time with me. He's going to be another contact that you'll have. If you ever want to sit down in person, Lenny is right there in Long Island. He's going to be able to meet with you in person, kind of answer some questions. Obviously, Lenny is a financial advisor. He's more than happy to dive into any aspect of the planning with you. But the PLIP, it really is going to be our focus here. And with that being said, we have, I believe, Lenny, do you have the question and answer up?
Yeah, like I was just wondering, maybe you could explain how the PLIP compares to a Roth IRA. We know the tax advantages are similar, but what are some of the differences, especially for people who are high earners?
Okay, fantastic. All right, so I have compared the two multiple times. The reason being is the Roth IRA and the PLIP create tax-free growth, tax-free withdrawals. All right, so all your money inside of both grows tax-free, comes out tax-free. If you die, it's tax-free. Right. The difference here is with a Roth IRA, you've got a 5-year holding period in the beginning. You've got a 59.5-year rule on restrictions. You've got contribution limits, meaning you can only put so much money in. Most of you make too much money to even qualify to contribute to a Roth IRA. And then, at some point, you're going to have to take that money out via RMDs, et cetera. Right. The PLIP has all of the advantages, all of the tax-free advantages. It has the creditor protection advantages, but it has absolutely none of the negatives, meaning there's no 5-year rule. Money is liquid at all times. There's no 59.5-year rule. You can access your money at all times. There are no contribution limits. We have doctors putting over $2 million a year into this program. You can put as much money into the PLIP as you'd like. There's no income restrictions, none of that. You all qualify. You all have this available, and you can access it at any time, like I mentioned, because there are no surrender charges. There are no liquidity issues here. It is a fantastic vehicle. In my opinion, it is much better than a Roth IRA, but that's just an opinion.
So a physician could put in money, it grows tax-free for all those years, and say at age 45 or 50, they have a kid going to college, they can just pull the money out and access that money tax-free for any reason?
Definitely, definitely. It's a great point you bring up because this is another 529 alternative. The idea here is to stuff money into a tax-free bucket, to grow it tax-free and then be able to access it tax-free at any point. So we have plenty of people that are doing this for their retirement, but realize they're also putting money into a 529 plan. Well, a 529 plan is great. You get all those same benefits, except if you do not use the money for any type of a educational reason, you can pass it to another child, you can pass it to your spouse, but you're going to wind up paying taxes and penalty on the money. Whereas inside of the PLIP, you get all those same tax benefits and the money's liquid at all times. So if you decide you want to supplement your child's college tuitions, by all means, you can pull money out at that point. Your kid gets a scholarship and you get a few years into this plan and you say, hey, you know what? I'm going to reward him. I'm going to buy my kid a car. Well, there's no restrictions on what you can access this money for. You can pull a chunk of money out and buy your child a car. You can do anything you want with this. If you're a younger person, this works for you. If you're an older person, this works for you. We can get money into this as quickly as we can. We can access it immediately, and we can kind of grow that tax-free bucket. So this works for people of all ages. I talk about retirement. Retirement means a different thing to each and every one of you. Some of you aren't ever going to retire, and some of you are going to try to retire as quickly as possible. But the retirement age is completely up to you. But the access to the money is there and gives you kind of a real easy vehicle to fund and access at any point.
Another question I had is everybody follows the news and we hear about legislation possibly changing in New York State, and we hope that it doesn't. But with wrongful death and liability, how does a doctor go about protecting their assets? Obviously, we know their 401k, their IRAs are protected because they're qualified money, but how they go about protecting their after-tax non-qualified dollars?
Sure. Okay. Well, and I did mention this earlier, but I'll touch on a couple ideas here. I've worked with a lot of doctors. We've had a lot of people that have investigated and attempted, and some do offshore investments. They pay a real fancy attorney to a lot of money to move their money offshore, and it's quote unquote creditor protected. The problem is when you access that money, most federal judges, anybody with kind of any experience in this whatsoever, will be able to find out. They'll be able to kind of attack that money, because while it's safe, while it's sitting offshore, when you go to actually use that money, you're gonna be winding up kind of, so to speak, exposing it, and it's going to be basically accessible by the creditors. Inside of the PLIP, we are using an institutionally priced variable life insurance chassis. All life insurance shares this exact creditor protection. It's like a qualified plan. So every dollar we reallocate into the PLIP is now completely creditor protected in New York and most states around the country. So we don't have to pay those hefty fees offshore to those attorneys. We don't have to move out of state. We don't have to do anything. We don't have to change anything. We're just reallocating our money. We're going to move it from our left pocket into our right pocket. It stays liquid. It now grows tax-free, comes out tax-free, but it's also creditor protected.
So they don't have to go through trying to hide the money, and they can still have access to it whenever they need it. But as long as it's in there, it's protected.
That's absolutely accurate.
Okay.
All right, so I'm trying to look at the chat here. I'm not really seeing any questions come through. Lenny, are you able to access? I'm seeing the chat between us and the panelists, but are you able to access the
Yeah, I can see like the Q&A. If anybody has any questions, we encourage you to please, jump in and ask away. We feel like that's the best way for people to kind of learn more about how it works.
Okay, I've got the Q&A up, but I do not have any questions at all. Looks like we still had a handful of you on. If there's anything I can go through, I'd be more than happy to. I'd love the chance to interact. If not, we understand, and some of your questions may be personal, they may be private. My contact information is here. Please schedule a meeting. We'd love to meet with you. We'd love to talk through this with you. I'd be more than happy to meet one-on-one. We'll set up a 15-minute phone call. We'll go through the program. We'll go through the ideas of it, and we'll answer everything you have.
All right. Looks like we did such a good job explaining it. No question.
I hope so. I hope that's the case. All right, well, ladies and gentlemen, then if there are nothing, we appreciate your time. We thank you for being here with us. Again, go to our website, fsgllp.com/PLIP. More information on the program, all of my contact information. Please schedule a meeting. We'd love to meet with you one-on-one. We thank you in advance or again for your time, and we hope you all have a wonderful night.
Looks like we have one question here.
Oh, okay, fantastic.
Is this available in all states?
Absolutely. Yes, I understand many of you have dual residencies. So yes, there are. This is available in all 50 states. There are actually advantages outside of New York in regard to some allocation options that we could go through if you are a resident of a different state. We can definitely go through that, walk through it with you. There are some extra incentives there, but again, we'll get into that one-on-one.
Also, same person would like to know if there's an age limit.
Absolutely not. Again, we can basically implement this up to around age 80. But that being said, this is a specialty vehicle, and I would love to dive into this question a little bit more. If you are older or younger, it won't matter. This will work for you just the same. But when we have older clientele, there are ways to kind of get around this. There are ways to structure this program with family members and really take advantage of some cool ways to pass down generational wealth. So if you have children that are successful, we can show you some great ways to do that. If you have a younger spouse, there are great ways to kind of show you how to take advantage of that. Again, too much to get into on the video, but I'd love to sit down together and go through a lot of that with you.
Yeah, I think the main crux of it, on top of the fact that it's liquid and you always have access to your money, and the fact that, especially in New York State, it's creditor protected, which is obviously very important. The main thing is the fact that each participant has the potential to save hundreds of thousands of dollars, if not millions of dollars in their lifetime in taxes. That's really the main purpose of this. And, creating, like Jason said earlier, that tax-free bucket of money, knowing that no matter what happens with tax code in the future, you'll have this nest egg to tap into and not have to worry about the tax ramification involved.
Good point. Absolutely. All right. Anybody else? Okay. If for some reason we did miss a question, I don't see any on the Q&A. But if you were trying to ask a question, if we did not see it, if it did not come through, please shoot me an email. My direct contact information, again, still on the screen. Give me a phone call, schedule a meeting. I would love to get together and really go through this with you. This is something you should all explore. You really absolutely should. I believe that firmly. It's the most client-friendly program that exists in the financial world. I'd be happy to teach you more about it. Okay. With that being said, I think we'll let you all get on with your evening. Thank you for joining us. Thank you for your time. I will send some follow-up emails with a little additional information out to each and every one of you. You have a wonderful evening, and we'll see you again soon.
Good night, everybody.